Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
This week has been a little trying for the global financial markets, and it's had its impact on India as well. The currency, which was reasonably steady at around the 69 mark, has hit 70 and now 70.3, 70.4. So clearly there is a flutter in financial markets. To speak to us about the trade deficit, about the current account deficit problems that may emerge, I have with me the advisor to the Finance Ministry, Sanjeev Sanyal. Thank you very much, Sanjeev, for joining us.
It's a pleasure.
Well, Sanjeev, for me, it's not markets and their ups and downs that worry, but the trade deficit number. The July trade deficit is 18 billion. If you take April, July, and that is 62 billion, and extrapolate, multiply it by 3, it comes to a trade deficit number which can bring current account deficit to 3%. Is that a worry?
We watch these numbers obviously very closely, and we are always concerned about the trends in it. But as things stand, there's nothing particular to be concerned about, and we need to be careful about extrapolating a couple of months' data either which way. So just like we don't celebrate a couple of months of good data, we will not celebrate a couple of months if the trade deficit widens a bit.
No, but the trade deficit has widened at a time when crude was not at its highest. Crude had receded considerably from...
well, it's still at very elevated levels, as you know. So it is something we watch carefully. So it is not... Remember this, it has come down. The numbers you are getting is not related to the recent come down. So
it was the July,
yes,
it's the July number. But even in July, it was not 80. It was more at 74,
yes,
75.
but the contract for that would have been done earlier.
Okay. So are you saying that it can come down on its own? Because Indonesia has actually started some administrative controls on imports.
No, so we will watch this, but we are not into doing administrative controls, as you know. And anyway, as I said, extrapolating 2 months of data in either direction is not a particularly good idea.
No, not a question of extrapolation, but since there is no one-off, since everything is growing...
As I said, let me reiterate that extrapolating 2 months of data in either direction is not very helpful.
Okay, but is not current account deficit a worry?
No, we watch it very carefully. Of course we watch. We're always a worry. Even the good times we worry about it.
Okay, no, is that linked to why...
So, okay, I think I made my point clear. We can move on to another question.
No, is that the reason why the rupee was allowed to depreciate?
No, the rupee is managed, at least for the last 3 decades, using exactly the same formula and framework which the Reserve Bank has been using, which is the following, that the rupee is allowed to find its own level in the long to medium term. The Reserve Bank, however, has a long-held policy of controlling volatility, which it has more than adequate foreign exchange reserves to do in either direction. So just a few months ago, it was appreciating very strongly, and it was accumulating foreign exchange reserves. And now that it is has been weakening, it has been controlling the volatility on the other side by using up the reserves. That's what the reserves are there for, and they are doing exactly what they have done for now decades. It's a well-established policy. Now, as far as the economics of it is, remember, I'm sure you've heard of something called the impossible trinity.
Yes.
If you have a relatively open current account, then you have to opt for either the monetary policy or the exchange rate in the long to medium term. Now, because we have now an explicit monetary policy committee-based system, clearly we have opted for monetary policy. So now, other than obviously extreme situations where we may use capital controls, which we normally don't, and allowing for some use of foreign exchange reserves to temper volatility, we will now allow in this format explicitly allow the rupee to find its own level. Again, whether it's the economics or long-held practice, we are basically doing what is the appropriate thing to do.
Okay. No, is the government's view or your view that a correction in the exchange rate is enough to bring the trade deficit and the current account deficit under control?
As I said, the rupee will find its own level. Now, one important thing that is always forgotten in all of this is that when you're thinking about competitiveness, which I think is what you're hinting at, we have to think about not just the bilateral exchange rate vis-a-vis the dollar. The rupee has indeed been weakening against the dollar, but if you look at the last 5 years, it has been very, very solidly stable. In fact, has appreciated, in fact, against virtually every other major exchange rate. So whether it's the euro or the pound sterling or the yen or in fact even the Chinese yuan, against whom obviously we should from a competitiveness perspective keep a watch. Against all these currencies we have been broadly stable. So the point is that what is really happening is, given various external factors including the Turkey situation, the dollar is strengthening.
Yes.
I think the better way to think about it is the dollar is strengthening. The rest of us are weakening consequently, because by definition everybody else weakens. Our exchange rate with pretty much everybody else is stable. So I don't think there's any reason to jump to any conclusion, panic or any other thing. And I think in fact I would be far more concerned if the central bank suddenly opt for a new an untried policy. It is doing exactly what it has done for a long time, allowed the long-term adjustment, managed the volatility, and of course in the very long term we also look at the real effective exchange rate, which is based on a basket of currencies against whom, as I said, we are very stable.
Okay, I'll just tell you the minor numbers in the trade deficit data that was released for July. Steel, iron and semis have gone up by 20%. Metals otherwise also have gone up by 20%. Now when you ask in the industry, they say that actually demand is outstripping supply in India. So do you think
so
therefore we have to slow down the economy? Because otherwise
well, it depends. I mean, we obviously make judgments on these kinds of things all the time. But the point I'm making to you repeatedly is that monthly numbers are extremely volatile. I've done this for decades.
I followed it as a journalist.
Yes, so I never get excited by good or bad data coming on this monthly data. You have to look at longer term trends. There are all kinds of spikes in all of this data. And sure, our economy is picking up, so yes, imports are picking up. But remember, the central bank has tightened recently monetary policy. As far as we can tell, things are not overheating just yet. Yes, to some extent you are seeing capacity being used up,
yeah,
which by the way is a good thing, and after a long time which will hopefully trigger private investment. But on the other hand, is this an overheating economy? No, in fact, if the latest inflation number has actually shown a decline, and inflation is basically back to the midpoint of the RBI's guidance range. So
yes,
the point I'm making is, let's not jump from a few weeks ago I was saying, oh my God, the economy is not gathering pace, to oh my God, it's red hot, we must now begin tightening.
No.
I think let's keep some perspective here.
Okay, no, the suggestion one economist, or in fact couple of them were making, is probably we are hitting our potential growth at 7.3, 7.4 itself, which is why it is leading to so much of imports. Output gap is closed.
Well, it would also show up in inflation in that case. It's not showing up. So I mean,
it's showing up in WPI.
Know,
it's not showing.
As you know, that the same economists were just a few weeks ago saying the economy is not gathering pace. Now they are saying it's too hot. My own view is, let's not jump to conclusions. Let's watch what is happening. There are lots of dynamics in there. Yes, the economy is strong, but is it overheating? I don't think so yet.
No, it's just compared to potential. Is the potential getting used up, and therefore now if it grows, it will create a current account deficit?
Well, it will obviously it will show through in many indicators, not just in current account. It will show through in inflation. It will show through in capacity utilization. I don't think even the capacity utilization number, which the Reserve Bank came up with recently, just a few weeks ago, in fact, it was good, but hardly in overheating range yet.
No, I was referring to specific commodities like steel.
No, they may be in specific commodities, but we cannot have a macro policy based on, oh my God, something's happening in X sector. But there are sectors where it may not be the case. So we have to maintain a overall view of the matter.
No, I'm only just for the last question in this issue, because the way Indonesia reacted, they raised interest rates,
they will,
and they had some administrative controls on some imports.
So some countries will
do we have to take some, export initiative, something beyond just macro controls, but actually controlling imports or pushing exports?
Where necessary, we will do it, but we are not. I mean, individual countries can do what they wish. But it is not the case that we just because a country did something, let them control it.
You are not contemplating some export
not
packages
yet, no.
or anything? Not yet. Okay, well, let me come to the question of fiscal deficit then. The worry or whatever, one of the puzzles everyone is grappling with is, and there were some reporters who had attributed it to finance ministry sources as well, that you may get 13 months of GST collections this year because the GST collection date, which was 20th of the next month, has been moved to 1st. So for FY19, do you think that we may count 13 months? The previous March was in FY19. We counted the March.
So these kinds of arithmetic things we need to overlook in many ways. Just like we asked you to overlook it last year for the 11-month collection, I wouldn't get too excited about the 13-month collection either. So the point is to, responsible policy making means that you look at the general run rate and observe that rather than fiddle around with the dates. I wouldn't, get too excited.
No, it is actually, it will mean 1 lakh crore more.
Yes,
and
but
so
the
then
point
you
is
will
that
need the fiscal deficit. That's why.
Yes, maybe. But the point I'm making to you is that a fiscal deficit is something that is a state of being. It is not a target for one point in time. So while from an accounting perspective, yes.
It makes a big difference.
But as I said, just like we asked you to adjust there, the people will make the same adjustment.
So it's possible that we get 13 months this year.
Yes, I have not looked at the exact implications of that change. But as I said, I mean, these are not things on which we are basing our fiscal policies.
No, certainly not. But I just wanted to know, yes or no, is it possible?
No, it's possible.
13 months?
I haven't looked at exactly what the implications of this will be. I mean, the date has been changed, I know that. But I haven't thought through exactly when exactly the payments are made. So I'll have to look at the data.
2-3 news reports attributing to finance ministry sources said that it will be 13 months.
So in which case we will get it, yes.
Okay.
So be it.
Well, what about expenses? Have you all done the math on MSP, and is that likely to be more than the...
So we are comfortable with what the numbers are likely to be. I'm not in a position to announce them, but we have done the maths on this and they are quite comfortable. And in fact, as I said, our fiscal position is very comfortable. Our cash balances are good. Some of it coming from the same acceleration and growth that we discussed a little earlier, which is why we are confident to do things like, as you know, lowering the GST rates on several items just a month ago. We have also, because of the good cash position, being sped up the refunds, not just of the exports, which of course is pending, but also of many of the direct tax collections. Typically these things take months on end. I think the first quarter we pretty much did 99% of it. So the cash flow of the system, as with anything, once you get into a virtuous cycle, you can utilize a lot of it to allow the system to breathe more easily.
I think the food subsidy was placed at 1.6 lakh crore, and there were doubts whether that is enough to wrap up
so
the
as
MSP.
I said, I'm not the right person to make numerical announcements, but it is comfortable.
But you're confident, despite the GST rate cuts, that...
Yes, otherwise we wouldn't have done it.
Okay, but therefore, if you're that confident and if you're getting 13 months, can the system
there's
expect more
acceleration in the
cuts?
economy, which you yourself said, and since people are now getting concerned about overheating, well, you can't be consistent and say, oh my God, revenues are coming in as well. Of course, I mean the economy.
I didn't use overheating. I said the potential growth of the economy may have been.
So this is a style of journalism in which everything must necessarily be bad on both sides of the book. This is not fair.
No, that is not true at all. Anyways, you're attributing words that I didn't use. But I'm just saying, has the potential growth been hit? I didn't say overheating.
Well, there is no evidence of it. It may have been, but you have to give me the evidence. So far, you've just said that the current account is widened for a month or something. So big deal. But the fact is, you cannot extrapolate that, and also extrapolate the inflation problem and have problems with revenues.
No, so
we can't have all of these problems simultaneously by the very logic of economics.
Absolutely, but with the GST rate cuts, you still feel comfortable that...
yes, I mean, obviously, it would not have been done if people were not comfortable with it.
So should we expect more in terms of rate cuts
as the situation emerges, measures will be taken. Incidentally, this is not a central government decision. In any case, it is the GST Council which takes these decisions. And being responsible citizens of policy makers of this country, they will do it only when the system allows them to. Okay. So since they saw the space, they did it. Now if there's more space, they will do more.
Now, let me move to a topic which both of us like very much, the insolvency and the banking sector. Before I come to the working of the insolvency code itself, which has been, of course, a big positive, the IDBI sale to LIC, are you happy with it? Because I remember when you came in, you were the person who said, you're converting the converted. I am for private banks and privatizing banks. But this one would have been an ideal candidate for privatization. It's gone to a government company.
No, I think you are being way too cynical about this. The fact of the matter is that in the long run, do we want a banking system which is 70% run by the public sector and only 30% private? Perhaps not. That is the point I made to you, that in the long run, we would like a better balance or mix between the private and the public. So that is something that continues to be the case. Now, the question is, how do we arrive at that? And, of course, one part is that the private sector also grows. But in the specific case of IDBI, the decision was taken by the LIC board that they thought that this was a good deal that they were getting for a variety of reasons, which they have stated in many interviews and so on. And that this was something that they wanted to take on. And incidentally, they have in the past taken over many public institutions and made good investments out of them. So let us not preclude their wisdom just because it sounds it can be made to sound like it was just a forced sale. It was not the case.
Okay. No, not a forced sale, but would the government want LIC one day to give up majority
That
stake?
is entirely up to them, because now it is in their board who has taken this decision. This is now up to them to manage it or not manage it however they wish.
No, the RBI's promoter rules are that promoter has to bring his stake down to 15% if he's an individual promoter and to 40% if it is a institution.
So the fact is that it is this bank too is run under RBI rules, and LIC, like any shareholder, will follow those rules. The central government certainly is in no position to dictate these terms.
So personally, would you be happy if LIC reduced its stake and allowed it to be like an Axis or an ICICI?
Maybe that's what they will want to do. One of the points about what we are attempting to do is to stop the finance ministry phoning up people to tell them what to do with their investments. So it is not in my place to tell LIC to do anything with their investment.
But personally, from the backdrop you came from, wanting that a larger space should be for non-government banks.
I continue to make the point, not just because of my background, but because it's good economics, that there should be a better mix and balance in our banking system between public and private. There are risks associated to both. So I'm not a votary of a purely private sector banking system either. But we do need a better mix, and which is fair enough that the private sector plays a bigger role. Now, however, having said that, I'm also of the view that the government should not have this daily looking at the governance issues of individual institutions, including public sector ones. So if a public sector institution has decided to buy another one, best of luck to them. That is their decision, and it is not for me to tell them what they should do with their investment.
I was just wanting to know what would your preference be, whether you would be happier if they were
my most important thing is governance, and the governance requires that the government takes a hands-off approach to commercial decisions. So the first step is that I shouldn't have an opinion about it. That itself is step one.
Okay. Well, personally, I thought you would have been happy if it had gone to a non-government institution.
I'm happiest if the principal economic advisor does not advise other people on what to do with their investments.
Okay,
that is the single most important part of governance improvement.
Okay. Well, I thought with you that
it would
think of selling it to a non-government institution.
No, if I was running LIC, I would have opinions on it. I don't, so that was the end of it.
What about public sector banks themselves? If you looked at the way the performance has been, although the system growth in credit, loan growth is 12%, public sector banks' growth of credit is in single digits, low single digits, mid 5% or thereabouts. I think barring Bank of Baroda, which reported a good loan growth.
Of course,
others are all in single digits. Want of capital. So do you think...
So it's not news that many of these banks require capital to grow, and as a finance ministry would want these banks to get on their feet and get on with it. As you know, a lot of them are under PCA and basically actually limited from growing by the Reserve Bank by that mandate. So consequently, there are serious constraints on the public sector banks as they are being cleaned up. But we recognize that the banking sector in general and the public sector banks in particular need to, at some point, get on with lending and growing again. So it is not enough to just go in there and give them regulatory capital to keep them breathing. We need to get them to grow again. So some parts of the banking system, one or two of the larger ones particularly, are in a position to begin expanding, and we would encourage them to do so, depending on what their capacity is. Again, we do not tell them. It's their commercial decision. There are, however, the PCA banks that will remain under the care of the RBI. But at some point, we would love for these to also, the better ones, to come out of PCA and also begin to go back to lending and expanding again. This is particularly important because the SME sector depends on the banking sector for capital. I mean, it's all very good for the big guys to go and borrow from the market or borrow abroad or from many other places, but it is the SME sector that is still dependent on the banks, and many of these are the public sector banks. So we do want the public sector banks to lend again, and this is unrelated to whether private sector should also keep growing. They too should keep growing.
No, I'll tell you where the concern of some of the bankers comes from, and I speak to them on a daily basis. See, the February circular of the Reserve Bank has asked them to belch out the last big set of NPAs. Okay. Now, if all those guys go to the NCLT, then the capital that the government has announced so far, 2.1 lakh crore, will only be enough for regulatory capital. They will not have enough for growth.
Of course,
so will you give them more?
So if where necessary, we will make other arrangements, of course. And remember, they are also beginning to get capital back from the NCLT process itself.
Yes, so, counting that.
So some of that money is coming back. Also, because of some of this tightening, whether you like it or not, one benefit of this has been that many defaulters and NPAs who were clearly, in hindsight, willful, have come back. Something between 80 to 90,000 crores has come back from those who have given it back because of tightening. So while many people, there may be many reasons to critique the February 12 circular.
No, I'm not criticizing
but that's all right. People can have their opinion. But one good benefit that has already happened is that this money has come back from who were clearly willful defaulters.
No, I'm not criticizing. I'm just saying that it has an impact of requiring more regulatory capital.
So we understand that some more capital may be required and arrangements will be made for it. One important thing that we have done in anticipation of some extra cases coming through is to create the Shasakt framework for below 50, 50 to 500 and so on, because we recognize that this may be in the pipeline, and so this process will be created so that NCLT doesn't have to deal with the whole gamut of things. So upstream was created for the NCLT process. So another thing that always comes up is, is this a way to bypass IBC? No. IBC is the main framework. Let it be adequately clear. This is merely creating the wider ecosystem for IBC to happen. Because remember, we got rid of many of the other ecosystems that used to exist, those complicated acronyms. But there are some elements of it, like GLF, which were useful. Yes. So we have brought it back through this.
To the intercreditor agreement.
Yeah.
But when will the AMC and the EIF...
So those things will take time. But we have put it in place so that at least the process begins. There are AMCs, foreign and Indian, who are already in the game. Let them begin to do stuff. At least the fellows below 50, let them get dealt with their individual banks and get on with it quickly. We have created a system where the lead bank takes on the 50 to 500 and gets on with it. AMC. So the wider ecosystem gets created.
Yeah, but just give me an idea when we might expect the AIF and the AMC to be...
No, this is up to, again, commercial decisions. I am not here to tell this or that.
Okay. No, you may be in on the news, so that's why I'm asking you.
No,
do you
this is a commercial decision.
September or October?
Yeah, no, there are already some of these people in process. It's not an AF, it is an ecosystem of many of them, and various people will create, private guys will come, all kinds of foreign people may come. It's an ecosystem of various kinds of individuals, agencies, etc. And this evolves. Some of that has already in existence now. It's not like this is a point at which we announce the existence. It's not. It's an evolving situation where what we have done is simply created a framework for this evolution to happen. That's all.
Okay. To end where we began, are you worried about the way global central banks will crunch their balance sheets? It's coming. I mean, already we are seeing dollar outflows. Will it be a worry if the Fed hikes rates?
So first of all, clearly the issue is really not with global central banks, but with the Fed. That is the main thing, and which is why the dollar is appreciating. The rest of the central banks have been quite easygoing. As you know, in fact, the Japanese have explicitly said so. Many of the other countries have not shown any particular interest in beginning to tighten things. And we will adjust our policies accordingly. And the Reserve Bank, as I point out clearly, will take into cognizance the wider ecosystem and not just a bilateral exchange rate. That is the responsible thing to do. So please don't get excited about a bilateral exchange rate. There is a wider basket that we need to take into account. There's no need to be, heroically standing out there or something. We'll just go with what the overall market takes us. Volatility, yes, will be controlled.
All right. Thank you very much, Sanjeev Sanyal, for joining.
Thank you.
Okay.